Let's talk about no deposit mortgage deals that we've all heard about a couple of days ago and a lot of people got excited about. Because from the first sight, yes, it looks great and it actually might be helpful for some people, but I think it actually is a trap, another one, from the government or from the banks that a lot of people that are already struggling with money can fall into. So watch this video if you consider this mortgage to understand whether it's something for you or maybe there are better options available. Hello guys and welcome back to my channel. My name is Anastasia and I invest into different things that I talk about on this channel, including property. And as a property investor, I learned one thing for sure. Banks are always trying to screw me over, and probably so is the government. So when I heard the news about the new mortgage deals where people don't need a deposit, I thought, so where is the catch? And I think I found one. Of course, from the first sight it looks like just a normal mortgage with a 5-year fixed interest rate, but there are some extra conditions that you have to meet in order to be approved for this type of a mortgage. The first condition, of course, is that your monthly repayments to the bank shouldn't be higher than your monthly rent that you are paying right now. And you have to pay this rent for at least 12 months. Money Saving Expert has made a very handy table which shows you the maximum amount that you will be able to borrow from a bank depending on how much rent you are paying right now. If you are paying £1,000 per month rent, the maximum amount that you'll be able to borrow is £163,000. I live in the southwest and I know as a property investor the prices of the property and the rent that you can achieve for this property. And I can tell you for sure that something that rents for £1,000 per month can be sold for nearly double the amount that the bank can lend you. So my area definitely falls out of this scheme and people will struggle to find the property that would be approved for this mortgage unless they are prepared to downsize and to downsize considerably. But if you're somewhere in the north, it might actually work for you, but you have to be prepared to downsize or to find the property in a much worse condition. The next problem is the interest rate. The interest rate that this building society that offers this type of mortgages right now is 5.49%. This is a couple percent higher than the average interest rate that you can get as a first-time buyer. The same blog, Money Saving Expert, has made another very handy table which shows that you will end up paying twice more than if you could save 40% of your deposit, £22,000 versus £11,000. But of course you can argue that saving up 40% of your deposit is a lot of money. If you're a first-time buyer, and you have to be a first-time buyer to be able to use this mortgage, there were other products already available for you. There were mortgages available where all you needed to have is a 5% deposit. If you manage to save 5% for the deposit, it gives you many advantages. For example, the interest rate already comes down. Secondly, at least 5% of the house will be yours. And if in 5 years' time you decide to sell the house, there is a good chance that your 5% of equity will grow in value. So not only you save money on the interest that you're paying to the bank, your capital also grows as the time goes. On the other hand, it's also a very good protection from the negative equity. In case in 5 years' time you will see that the price of your house has gone down, which is also possible, the 5% of equity that was yours from the very start will save you and protect you from being in negative equity. On the other hand, if you borrow 100% of the total value of the house, you don't have this protection and again you might find yourself in a very difficult situation in 5 years when your fixed rate period is over. Skipton Building Society, the society that offers this type of mortgages, say themselves that there are 15 different products, different mortgages that are offered to the first-time buyers without any deposit. But this is the only product that doesn't require a guarantor. So there are multiple options available to you already. And if you struggle to save 5% for a deposit, and if the government really wanted to help you, then maybe the government should teach people or help people to save money, start saving money, rather than put them in a bigger debt, especially because these are the most vulnerable people, people who cannot save 5% for first deposit, obviously the people who are struggling with money already. Ultimately, the result that it will achieve for sure is the prices of the property will grow. People like me, people who invested into a property earlier, they will be the people who will benefit from this scheme. And for banks, it's just business. They always have their backs covered, they always have themselves protected from every side. If you ever read a contract that the bank gives to you, you will see that there is absolutely no chance for them losing money, and the only person who will end up in trouble in case something goes wrong is you. And I understand that with the higher interest rates, people started to take mortgages less often, which means that the profits of banks and other lenders have gone down. So they need to find a new product for a new audience. I think the new target audience for them has become the group of people who struggles with money and doesn't know how to save. They say that it's a trial product and it can be withdrawn at any time. But if you're listening to this video and you think that you are interested in this mortgage, please consider other options and maybe look at other ways of how you can save some money up. Even if it takes you several years, the thing that we all have to remember is that for them, it's business first of all. People who are renting the property now and cannot save any money for a deposit, in 5 years' time, if the situation goes wrong, will simply be able to find another property or downsize the property that I'm living in now. If you tie yourself up to a mortgage today and in 5 years your financial situation doesn't get any better, then you will be tied up to this property much more and you will find it more difficult to downsize, to sell, to do anything with this property, because there will be your name on the mortgage and a huge debt next to it. And this is the thing that you have to remember. I'm not saying that this product is very bad, and I hope that it will help some people to get on the property ladder. But watch out. As I started this video, I will finish it with the same phrase. I don't believe that banks are ever trying to help. And truly speaking, I don't believe the government is trying to help either. Watch out for yourself and help yourself if you can. Thank you very much guys for watching this video, and I hope to see you soon. Bye bye.